traders, my name is Horat and welcome to a new video analysis in which we will take a look on the euro dollar, dollar Swiss, AUD dollar, S&P, gold and crude oil. On the euro dollar, on the weekly chart, as you know, we are tracking this running triangle placed in wave B position, and we have turned bullish lately for more upside in wave E, which should be structured by corrective subdivisions. So here we are tracking this primary wave count 1, where we think that market accomplished a running triangle placed in wave B, which was our second leg in this free wave rally in wave E. So now we are tracking a third leg. Okay, now this is probably wave C, which should then be made by 5 waves. This was wave 1, wave 2 pullback, and now it seems that we are going higher in wave 3 or 3 at the moment. So expect maybe pullback next week in a larger degree, and then another push to the upside. But the idea is here that the trend is bullish and that we expect more upside in the next few days and weeks towards 1.4 level, and then maybe even higher. Okay, here is also the second wave count, the alternate count, which is slightly different but still shows corrective subdivisions in this wave E. I label this as an incomplete double zigzag. This was a first zigzag, W, then wave X, and now we are tracking a second zigzag with wave C in progress. Wave C, as I said, is a motive wave, should be structured by 5 waves, so even this wave count suggests more upside if you suspect that this was wave 1, wave 2 pullback, and now we are rallying in wave 3 of C. Okay, so in either case we think that euro dollar is heading higher. Here is our 4-hour count. This is wave 2 pullback, very complex correction which caused an acceleration to the upside after penetration of this upper trend line of a corrective channel. So if that's the case, then we think that new impulsive rally is now in progress that should unfold in 5 waves. So I think that this was wave 3, maybe finished here, and now we will see some kind of a sideways price action in this range that will represent a wave 4, and then more upside probably early next week. Okay, and now let's take a look also we set on dollar Swiss. Here is our dollar Swiss monthly. Firstly, on the monthly chart, we can count 5 waves of decline. We know that after every 5 waves correction follows, so we should see 3 waves of a pullback. Ideally this will put the price or send the price back to the termination point of a previous 4th wave, which was here. Okay, so we expect more upside on dollar Swiss, but this was monthly chart. On the weekly chart, firstly we need to identify end of a current counter-trend movement, which we think it's a wave B. So this was wave A. We are now in a wave B. Wave B is a corrective wave. Usually I'm looking for a wave B retracement for a minimum of 38.2 compared to the previous wave A. So we are testing these levels now, but I would not be surprised to see maybe an extension even down with current wave C towards 50% of wave. Okay, because we can measure and project maybe this wave C. As you know, in ABC move, wave A and wave C are very often similar. Okay, so I took this distance of wave A and will project it from this endpoint of wave B. Okay, this was an endpoint of wave B and not these levels, because this was a triangle here. Okay, so if we zoom this in, okay, so if we project wave C down, then this wave C compared to wave E levels, just a second, could easily go even deeper here. In fact, on the daily chart, here we can see a recent break through this support line of this triangle. Okay, and notice that this support line then turned into resistance after a pullback in wave 2. Now this is a very nice, almost a textbook example of a continuation with a larger downtrend. So I suspect that yes, we are heading lower in 5 waves here on dollar Swiss. Okay, so for now I'm bearish on dollar Swiss and will look for acceleration to the downside as long as the market is trading beneath this latest swing high. Okay, that one. So dollar Swiss is also bearish. On the 4-hour chart we can see some evidences of an impulsive downside price action. I suspect this was an extended wave 1, wave 2, wave 3, and now we will see sideways price action in wave 4. So I think that we will see early next week move down into wave 5. And now let's take a look also on Aussie dollar. On Aussie dollar, we will take a look firstly on the weekly chart. This was clearly a 3 waves of a pullback on this weekly, where wave C was very similar in distance compared to wave A. Notice that prices also reversed from the lower side of this corrective channel, which is a parallel line of connected from this point to end of a wave B, and I put this parallel trend line at the bottom of this wave A, and you can see that wave C reversed from these levels. We are now already slightly above this mid trend line of this corrective channel, which is an early indication that trend is changing here from bearish to bullish mode. So on the daily chart I'm tracking this aggressive bullish wave count with 1-2-1-2 scenario, which means that current price action represents wave 3 of larger degree of wave 3 in progress. Okay, so if that's the case, then market should continue higher in the next few days. And this should not be a surprise, because on the 4-hour chart here I can see temporary pullback only, because it has not it did not unfold in 5 waves, so I can see only 3 waves here into this 50 and 38.2% retracement area compared to the previous wave 3, which is characteristics or some evidences that we are in wave 4. Okay, so I expect more upside probably, as I said, next week into wave 5. And from a confirmation point of view, I would love to see impulsive rise from this latest swing low in, of course, in 5 waves back above the previous swing high, which I think represents wave B. Okay, so if we see a daily close above this swing high, then this wave 4 lows will be locked, and we will look immediate higher in wave 5 towards, as I said, this is alternate count, towards this 261.8% extension area. Okay, and now let's take a look also on the S&P 500. We have also turned bullish on the S&P 500 already a few weeks ago. Actually, firstly we will take a look on this weekly chart. We are tracking an impulsive price action, very nice clear textbook pattern that is in progress. We think we are in a wave 3 here, which could easily extend much higher. However, in our past videos we mentioned a potential ending diagonal here, but notice that price is now already above this trend line. Okay, so today is Friday. If we will see maybe even acceleration to the upside and stay above this trend line for the next week, then this ending diagonal, I will put it on the side, okay, and I will focus on this price action, which suggests that this was just a sharp 3 waves down in wave 4, and that this wave red wave 5 will unfold in 5 waves. Okay, so in such case this wave 2 was labeled as a running flat. Okay, so for now I like this wave count, especially because I can see some strong moves to the upside, but that's daily chart. Okay, to me the most important are 4-hour structures, and here I can see waves 1, waves 2 pullback, nice extended wave 3. We were tracking this wave 4 pullback in this week. We also mentioned in on our Elliott wave counts page, and also posted a strategy and noted that we expect a bounce higher from this former supports. Okay, because we know that when wave 4 will occur, you will typically see a retracement back to the previous termination point of a wave 4, and then a reversal higher again. Now I think this is also a very nice textbook example, because notice that wave 4 came very close to this 38.2% retracement area compared to wave 3, which is a very typical Fibonacci retracement level. very important for fourth waves. And the second thing is that this wave 4 was very similar in length compared to the wave 2, which are both corrective waves. Okay, and now we are reversing higher. So actually there were 3 points that were suggesting that market will reverse from here. Okay, firstly it was previous fourth wave, then it was 38.2% retracement area, and then again it was this length of a second wave, okay, measured from this high. Okay, so I think that we will see more upside here in wave 5. Maybe this wave 4 was also a triangle, but in either case I think that wave 5 could reach 61.8% projection target, which is measured or taken from this wave 3 distance. Okay, so 61.8% of wave 3 could reach wave 5 here. Okay, and then of course expect a pullback. Okay, if we will see a deep pullback in just 3 waves, then of course we will immediately again turn higher on the S&P and will focus on this wave count. If the market after this completed 5 wave move will unfold in 5 waves, then I would maybe focus on ending diagonal. Okay, so for now this 4-hour count is the most important, and even more important will be the structure that will follow after a completed 5 waves up. So for now let's focus on 1 wave at a time, which means more upside in the next few sessions, probably early next week. Now let's take a look also on gold. Now on gold monthly chart, yes, we can look on the monthly chart. On the monthly chart we are tracking a 3 waves of retracement here after this 5 wave rally from 2000, and notice that this 5th wave was extended, which is very common in commodities. And usually when you have an extended 5th wave and correction will occur, you will typically not see a reversal back to the previous 4th wave termination point. In fact, you will probably see reversal back to the start point of wave 4, which was here when 5th wave is extended. Okay, so I'm looking for a limited downside here, but would love to see a test of this psychological level around $1,000 per barrel. Okay, where I think that wave C could bottom. So for now we are still bearish on gold, and the reason is also very simple here. Notice that here we have only 3 wave rise. Wave C was very similar to distance compared to wave A. We reversed from the previous 4th wave. We reversed from this upper trend line of this corrective channel. We also moved to the downside and broke through this trend line. So bias on this time frame are bearish as long as the market is trading below this critical level. However, I do not expect immediate sell-off just yet, because I think that if the market will be heading lower, then firstly of course we need to see a completed wave 2. I think that wave 2 could be forming a flat correction here, actually an expanded flat. In an expanded flat correction you will see reversal back into the previous region of a wave A, which was here. Okay, so if we draw a line here, I expect more upside. I guess there are a lot of stops above this swing high, so maybe we'll see a spike higher and then a reversal to the downside. Okay, so that's the wave count that I'm tracking as a primary scenario. But for now, as I said, we need to focus always on 1 wave at a time, so I'm just looking for more upside for now, and then we will see what will happen when we will reach this region above above 1375, maybe around 1390. Okay, so if we'll see a reversal to the downside, then of course this wave count will be confirmed, and I will put my focus on this wave count. If maybe price will just continue sharply to the upside and will not reverse from this region, okay, then of course we will have to go with the sentiment, and in such case I would focus on this wave count, which suggests actually that this was a 5 wave rally. I know that the wave count is not very clear okay, but wave 4 did not overlap wave 1, so the wave count is actually valid. And even this decline was not very clear, okay, it can be counted in a corrective way as well. So this could easily also send prices to a new high. So for me it will be very important to see how market will respond when once we see this 1375 region. Okay, we will see strong move to the upside with accelerating price action with a daily close price above above 1375. Then this could easily send gold much higher in days to come. Okay, and now let's take a look also on crude oil. On crude oil, if you recall, we were bullish. Okay, firstly we thought that this wave E was actually finished here, and that this was wave 2 and this was wave 4, and we were looking for something like this. Okay, but notice that now this price has fallen into this territory. Okay, so if you label this as a wave 1 and now this wave 2, then this wave count is now invalid, because as you know, in impulsive sequence, okay, this wave 4 must not trade into territory of wave 1. So something like this, okay, and then go up is not correct. Okay, so I relabeled the wave count, and I moved wave E and wave D from this termination point to this, and a wave E from this level to this level. Okay, so actually this still could be nicely counted as a completed triangle in wave B. In fact, and the rise from here to here can easily be counted in impulsive fashion. Okay, so if that's the case, then this market still could continue to the upside, because this is then only a temporary retracement. Okay, probably wave 2. And in fact, on this daily chart you can see these nice 5 waves to the upside. Okay, on this daily chart I'm tracking potential double zigzag here. Maybe this was the first ABC move. Okay, then wave X, and now maybe we are in a second ABC move. And notice that now we are also at this very important 61.8% retracement area, very important for second waves. If we will see a reversal to the upside in impulsive fashion, which means 5 waves from the lows, okay, only then this will be our confirmation, okay, that wave 2 has bottomed and that this market is heading higher back towards this region. Okay, if the market will just went straight to the downside, then of course we will consider new different scenarios. But for now, I think that based on this weekly chart, based on this potential completed triangle here, and only a retracement of 61.8% retracement compared to this wave 1, there are still very good chances that we will see a reversal to the upside on crude oil from bearish to bullish mode. But as I said, it would be nice to see an impulsive rally first before we can confirm the wave count. Okay traders, that's it for me for today. I have some important stuff to do, so I will catch you with new updates on Sunday with the daily charts on the Elliott wave counts page, and then on Monday with 4-hour and intraday charts. Okay, have a good day. Bye.